Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, giving you professional market lessons that I learned way back in the day. Market structure, a principle where we're going to start to go over some principles of the market in 5 minutes or less. Got to give myself some extra time instead of the 3 minutes. But anyway, the principle says that anytime a marketplace travels from a high or a low, and we're going to just do the high today. I'm looking at a weekly chart here, the sterling yen. If it travels 600 points from a high, it means that a top is potentially in. The second principle we're going to cover is that once it travels that distance and it creates a top, it should go back to the origin of the start of the bull move. So this is a really cool principle. Again, I'm using weekly charts on this, and you can find this. What I suggest that you do is that you actually go to a weekly chart, any currency, and use this principle. Now, it's a little bit different for cryptocurrencies, and I'll go over that in another video. But right now, we're just sticking with the fiat currencies. So we're saying anytime a market moves from a high 600 points lower, it is signaling that a top is in. So I'm going to take this section of the chart right here, and we're going to analyze this section. So what we're going to do here is we're going to take the top of this marketplace, 168.43. 600 points less from this is what? 162.43, right? So if I mark down to 162, 42, that's close enough. I put, let's see here. We got to put a line over there. 162, say 40. It's fine. 162.90, 162, where the heck is it? 162.34. That's close enough. This market on this weekly broke this. This is basically saying that this market principle is saying that this high right here is in. So in other words, this is going to be resistance until the second principle occurs, which is that it travels down to the beginning of the origin of the bull trend. So here's our cutoff. Marketplace travels down. Did it travel down to the beginning of the bull trend? Not quite yet. If I'm looking at this movement down, it hasn't done it. It came down from here, came back down. So right now, as the market would stand, is that it would need to travel 600 points from this low to basically say that the low is in, according to market principle. Okay. Now, it used to be known as market laws, but they're not really, I don't consider them laws. I consider them like guidelines to try to give me an idea of where a marketplace basically could find resistance, and for a very good move, because we're talking about 600 points here. 600 points is a good payday or a good pay week or a good pay couple of weeks. It's definitely great for traders that do not follow the marketplace every day and they want to take longer term trades. This is a very, very good principle to apply. And I implore you to constantly go and test it and try to figure out how you can personally use it. But marketplace travels down, breaks below 600 points, marketplace comes down. In 1, 2, 3, a month later, it basically comes and tests this high again. So hang on a second. Let me get a little box here. I love this little box when it works. Right here is basically a double top. We still have this point, this break. It does break. And guess what it does? It travels down to the beginning, the origin of the bull trend right here. Marketplace comes down, travels down to the origin of the bullish move. So in other words, from this point, it traveled 600 points higher, and then the marketplace basically consolidated and tested this. So there's actually 3 principles. Marketplace basically will cover the same ground twice, and I'll go over that in another video. But this is the most important concept we have. We're approaching 5 minutes. I got 10 seconds left. So hey, if you like what you see, please like and subscribe. Also, don't forget to go over to Park Avenue Trading and get yourself a free ebook. Please leave some comments. Tell me what you think about this. 502 and Tom out.